Well, good evening and welcome everyone to Knowledge is Power Podcast Live. Let's see here. Tonight, today, our guest is going to be Miss VANESTER Walker Washington, the owner of Guarantee Express Tax Service. I said that right? Yeah, I did.
Yes, you said
Yeah, I
right.
got that right. Yes. Knowledge is Power Podcast is a platform to share important information by educating Southeast Texas African American communities with valuable information on health, education, financial, politics, business, and just about everything we can cover to share with you. And right now, we're going to move over to the set, and we will start right now with our guest, Miss VANESTER Washington. Hello, VANESTER. Thank you again.
Hello.
We've been
It's a
away for about
pleasure
a
to be.
month. Yeah, we've been
Uh,
away from you've been away from us about a month and a half,
I
but we're
know,
back.
right?
Yes,
I
yes,
missed
great
you
to have
guys. So
you.
it's a
Yes,
pleasure to be back here. It's always a pleasure to be invited to be able to participate in knowledge. So I
yes.
thank you for accepting me as a guest and
You're welcome.
for accepting my knowledge or my
Right.
attempt to be knowledgeable in the facts of what we're talking about. Right now, I know I thought about it and I wanted to share with others um, the business side of things. And what I'm talking about now is hobby versus business.
So
And
tell us about hobby versus business. That's the topic for this evening.
yeah,
So we're talking about if you want to do if you're doing this for a hobby or you're doing it for a business. Which
right.
one?
So, and that's the question there is, why do we care? And then the other question would be, is the activity considered a hobby or business? And I
Right.
have a couple of objectives that I wanted to share with you guys. And one of them is why the determination between a hobby and a business is important to the taxpayer. To review the 9 factors that the IRS has developed that will determine if they question your business in that manner, if it's a hobby or a business, the 9 factors that test that they go by, and also how to apply the hobby on the 1040. So a hobby is, by definition, it is a person's side project. Some people call it a side hustle, but they don't intend to go in it for a business. And so a business, according to the IRS, is that any trade or activity that you are engaged in for a profit. And those are key factors because a hobby, you cannot have a loss in a hobby.
Mhm.
Uh, so if your business has not been deemed a of your activity, let's put it that way, has not been deemed a business, then the expenses that you incurred on the business, you cannot report a loss on your tax return. Of course, you can report a loss on your tax return if you're in a business and that is for profit.
Right.
Um, and then the IRS also have this safe harbor rule, which many of you may have heard about, and that is, if an activity has been engaged in in 3 out of 5 years, what for in a profit, you have to have a profit 3 out of 5 years. Now, does the IRS, take a immediate look at every business every 3 out of 5 years of a business to determine if it's a hobby or a business? No, of course not. They don't have the manpower to do that. But how do they determine who are they going to audit? And those are a lot of factors that are involved in that. But if they do make the determination or do select your business and determine to see if it's actually a business or you're in it for a profit, then they're going to use what I'm going to talk to you about, 9 factors. But there are 3 main requirements for the business. You have to be engaged in it regularly. You have to be engaged in it continuously, and you also have to be engaged in it for a profit. So, and then they look at it that if a person is in a business and that business is consecutively losing, has a loss, and that loss is used to offset taxpayers' liability, and that's his income from his other business, then they may look at your business and say, is this a business or is this a hobby? And of course, as I say, it's very important. You say, why do we care? Because it's very important. If the IRS determines that it's a hobby, then they're going to include the income, but not the expenses. Because in that post, what they call it, TCJA, Tax Cuts Jobs Act in 2017, that eliminated our ability to deduct hobby expenses. So you have the income, which the IRS wants you to report all income, but you may not be able to report the loss if they determine that it is a hobby and not a business. So and then like certain entities they look at like this: a Schedule C, which is a sole proprietor; a farm, a Schedule C is reported on Schedule C. A foreign business is reported on a Schedule F. And then you have an S Corp, which is reported separately from the tax return. And the IRS automatically presumes that corporations or C Corps are automatically a business. They would not have to go through this factor test, whether or not they had losses on their business or not, or gains. The IRS automatically assumes that C Corp or corporations, C Corps, are automatically a business. So, I mean, maybe one may say, oh, how fair is that and how unfair it is. It's just a factor because because the C Corps actually, C Corps actually pay taxes on the business on that thing. They're not what's called a pass-through entity. So, whatever happens at the C Corp, you pay taxes on it. If it's the other ones I named, then it's passed through to the individual side. I mean, that's to the individual tax return. And that's where the issue comes in. And that's why the IRS felt the need to make these laws or implement these new objectives or letter rulings is what they call them, so that a person just can't continuously write losses off so that he can get back all of his federal withholdings from his business, and he really is not actually and actively in a business for a profit. I'm going to name the 9 factors, but we probably will not be able to go through all of the factors. And if anyone has any questions as I'm going through, please don't hesitate to ask me. The 9 factors are: do you treat your activity as a business by maintaining accounting records? Do you put time and effort to appropriate a profit for your business? Do you depend on the activity for your livelihood? Are losses beyond your control? Did the loss happen directly as a startup cost, or was it other determining factors that caused the loss? And that's where you go in the first 3 out of 5 years. And for farms, it's 2 out of 7. And farms are inclusive of horse raising or horse racing. Did you change your business operations to achieve or improve profitability? Did you engage with an advisor that has knowledge in your profession that can guide you on how to effectively run your business? Have you profited from running an active business before? And has the activity ever made a profit? Can you reasonably expect the activity to earn a profit from the appreciation of its assets or that are used in the activity? And you might say, why are all those things important? And they are very important. And it seems that some people, I try to stress this with my clients when we're doing the business side of it. That's why we want to talk about the manner in which you run your business. Do you have a bookkeeper? Do you have an accountant? Do you have a separate bank account? Do you actively and continuously engage yourself in that business for a profit? You have to spend time in it. It's just not saying I have let's use a dog grooming business for instance. I have a dog grooming business, and that business, it may not show a profit up front all the time because the dogs are groomed and then bred, and then the litter is then held for a period of time and then sold. So that may happen it may take 3 years to do that. I'm not a dog groomer, but I'm just using that as an example. So if the IRS decided to audit that client and to determine whether or not he is actively engaged in a business for profit, they're going to ask all those questions in the audit. You never want to sit down with the IRS unless you really know what you're talking about in an audit, because there are a lot of things that may be brought up that you don't understand. And then once you open Pandora's box, it's open, and then it's left up for interpretation by the Internal Revenue Service. You always want to be, of course, factual and honest in any audit or any aspect of your tax return. But I just say that if you don't know what you're doing, you don't understand the laws, and you don't engage in an audit alone. And when I was saying that the manner in which you run your business, that you maintain books. Let's say you didn't have an accountant, but you can maintain your books in QuickBooks or some form of accounting. They look at that as a business-like manner. Did you change the method that you were working on to improve your profitability? That's why our last podcast, I think we went over. I don't think we did go over entity setups. And I did stress the factor of separate accounts. I stressed the facts of hiring a bookkeeper, and I know that's a cost, but that's a write-off. So the IRS wants to see that you are, you're legitimate, pretty much. So, and there's several court cases that's out there that will that the IRS looks at, or that you can look at, and all these things are public knowledge. So a lot of these court cases are done to they follow up on the like if it was one type of business and that happened, they look back at court cases. You can cite court cases. That's why I say you don't want to do this on your own. You want to actually have somebody out there to help you. Now, each year the IRS can make this determination. And each year is based on an individual basis, a year-to-year determination. Things change, factors change, all of those things. The profit motive, what the IRS is talking about, is the circumstances that indicate that the business is in an activity to make money. But it just so happens that the business expenses exceed the income. And that happens, and that's why they did the 3 out of 5 for Schedule Cs and the 2 out of 7 for farms and other things, farms and rental properties, to be exact. So we want to make sure that we take care of our activities in our business. We want to make sure that we keep accurate records and receipts. We want to make sure that before we actually engage in the business, we do those steps that I talked about. Talk to somebody about your business. Research the business to see, what that industry, what it looks like. Whether or not you decide to go in it, you did your due diligence. That's what it's pretty much called. And so you want to, back to expertise. get a taxpayer or a tax professional or a financial advisor, or you look at that. Did the taxpayer have expertise in the business? Had you already had a business that was established where you knew what you were doing? They want to look to see if you had some prior knowledge, or if you were able to run a successful business in the prior to this new business. It's not a what do you want to call it? It's not a mandate that you have had a successful business, but it does help in the determining factor, because the burden of proving that if your business is a hobby, or if it's a hobby or a business, lies on you, or the person who you hire, or the person who represents you in an audit, or who has walked alongside of you in your venture of your business, the person you sought out before you started the business, who helped you with setting it up, helped you with the LLC, helped you with all those things. I know that a lot of people, when they first start off in a business, they want to go all over the place. They want to go to a legal company online to set up the LLC. They want to go to sites on the internet to acquire their EIN numbers and things of that. And then, these people sometimes are on the internet, and they're charging you, but you want to keep your eggs in one basket, as my dad used to say. You want to, if you have, and you've been with an accountant or a tax professional for some time, you want to try to utilize that expertise. You want to utilize the person that you are trusting with your financials, and either get the advice from them or get the help from them to start the LLC, so they can step you along the way and make sure that you are doing your business in a business-like manner. We just want to jump into things and not count the cost. We have to count the cost of all those things. And did you follow general accepting practices for that activity? A lot of people who create the LLCs don't even know that they have LLCs have financial obligations, annual financial obligations. Every year you have to file we talked about this in the podcast when we did the entity structures. You have to file an annual franchise report. You have to do that. You have to make sure your professional does that. But if you're out there seeking on the internet, trying to find a place to do all these various things, and you didn't inform your tax professional on that, then it's you come into where she didn't know, and so she didn't do the franchise tax with your return, and then for 2 years and past, you're actively in a business with her, and she didn't know you had created this LLC, and now you didn't file your LLC for 2 years, and now your LLC is forfeited. And that's why I say that, I'm pretty sure that most of us have obtained our tax professional because we trust them, and because we know that they are professionals. So if you trust them, then you trust them completely and fully with all aspects of your business. So don't just jump out and try to do these things independently of the person that could be your best source of help. And then they want to know how much time and effort did you put in the activity. They also asked questions about, are you dependent on this for your livelihood? I know most people who first started off in the business, such as myself, when I started my business, I had a job. So although I didn't necessarily depend on that income at the beginning, I certainly depend on it now, because I am independent of a job, of a W-2 earnings, put it that way. So you want to make sure that they look at all of that. They just want to make sure that we are not out there where we got people that's making 6 figures, and they're either not withholding the proper federal withholdings, or opened or structured a business and that generates such a loss that every dime that they withheld in federal withholdings throughout the year, they get back. Now, that's a possibility. It is a strong possibility that that can happen. But you got to have and make sure that you have all your ducks in a row if they decide that they want to audit you and make a determination of whether or not your business is a hobby or is an actual business. You have to be, when you're in an audit with that, you have to master all of those tests. It's not 3 out of 5 of the factors that I mentioned. It's 9 out of 9, and it's individually. And you need somebody to be able to represent you. And the only way your tax professional can represent you is if you keep them in the loop.
Mhm.
People don't. And I've had so many people who have called me just this year alone with the LLCs, or that are new LLCs owners, and they didn't know about this beneficial ownership report. They didn't know about the filing requirements for the LLC itself, which is the franchise report. They don't keep their documents. You need to keep your documents. When you file for your LLC, you started off with your certificate of formation. And then after, they gave you, either you created an EIN number with the company or you did it by yourself. You have to have an operating agreement. You have to have a, a business intent or business-like manner, because the LLC is that. Most of these structures require you to have some formal meeting about the business. So those are tools that can help if you're ever audited. So when we go back to say, why is it important? It's detrimentally important to you to make sure that you have your stuff in order. If you, in fact, made a six-figure and you, in fact, had all $30,000, just a number, $30,000 tax refund because of the loss in your business, you are able to reduce your tax liability down to zero, and you get all that money back. And then 2 years down the road, the IRS say, "Oh, was this a business or not?" And then they do all this, and you go through all these questions, and they go through all these factor tests and all this stuff, and it was determined you have a hobby. And remember, in the onset, I told you hobbies have no losses. So if you got $30,000 refund based on the liability and the loss of the business venture or the activity that you went in that has now been determined to be a hobby, I pay all that money back.
Mhm.
Get all that $30,000 back, plus penalties and interest and all these things that will be piled on top of that. It's not unusual, but it's possible that you will get that refund, and the IRS will wait 2 years because that's just their backlog and that's just how they handle things. 2 to 3 years, and come back at you and make you, because you have the burden of proof, show them that what you're engaged in, it is a business. And everything that I'm talking to you about will help that. And you got to make sure you keep all your stuff in order, all those things. You have to have an annual meeting. Even if you have a meeting, you have annual, monthly, quarterly, however you want to have it, when you structure that LLC. That's part of your operating agreement and your articles of incorporation. So if you decided that you want to do that, the person who created that LLC for you should be able to give you those things, and they will. And every year that when I'm dealing with clients with the franchise reports for the LLCs, I ask them, because I need this web file number. It's a letter that once you have structured your LLC, the Secretary of State is going to send you a letter. They're going to send you all kind of letters. People are going to start sending you letters all of telling you need to do this, that, and the other. But this franchise letter is what you need in order to file that report. It's a web file. It's a number that the Secretary of State assigns to you. If you don't have that, you're not filing a report. You got to have the number. The Secretary of State is very good at allowing your tax professional or your accountant or whichever type structure you have as far as a financial advisor, to talk on your behalf with them to be able to get that information. But it would be very good if you had that information up front. It would save a lot of time. There's a lot of these letters going out, and people are getting fearful of what they mean. And it shouldn't be. I myself I don't think you should be afraid of any letter that you get. What I think you should do is what I know you should do, not think. You should respond in some manner. We need to know, you need to know, and your accountant, tax professional needs to know the rules of engagement, the rules of engaging in a business, the rules of the formation of LLCs, the rules of the IRS, and how they determine the factors that will ultimately could be the determination that your business is a hobby. So I think that the time, so that go back to the time that you spend. There's the time you spend in these businesses makes it important to the IRS to know whether or not you serious about your business. When I started my business and I was working, my it just so happens that my type of business is seasonal. So it used to be seasonal. I'm totally year round now. Seasonal meant, you have starting off, it's going to start from January and to April. And then I was able to actively work in my other business, but I actively engaged in my business through the pursuit of clients, to the pursuit of knowledge, those things. That's what I done in my business. At some point, I stopped working and I went fully engaged in my business. But I did do all that I'm telling you to do. I'm certainly not telling you anything that I have not done and I am not doing. I stressed in the entity formation podcast or sessions that, although the costs sometimes may be great for you to seek a professional to help you with your business, but the cost is deductible. And you can't effectively grow your business without having someone doing what they need to do to help you. You don't know the day-to-day bookkeeping. You don't know the day-to-day things. At the end of the year, you're trying to swarm up and keep receipts and all these things. And I literally have clients that come in with bags of receipts at the end of the year for me to go through for their business. That is more costly to them than it is for me to do their books every year. And we've gained a lot of them along the way, because when they at the end of the what I call a roadmap of the 1040, it's it costs a lot. It's too much. Then they want to say, oh, you're too expensive. Well, you brought me 3 bags of receipts that and believe me, this happened. Dirt in them, they're balled up, all that stuff. It takes time. It's called billable hours. It takes time to go through those receipts, to categorize those receipts. Whereas if you had the bookkeeper, or the accountant or whomever you have trusted with your financials, doing that for you on a timely manner, you're doing several things at one time. You're reducing the cost. You're what you call it. You're meeting the requirements of the IRS. For a business, you're meeting the requirements and the factors of determining whether or not that business is a hobby or not. You're meeting a lot of factors that may not be important to you in that moment, but at any moment you can get a letter from the IRS. We're getting ready, or we're already there in the age of the AI, which is artificial intelligence.
Mm-hmm.
Artificial intelligence, they're setting up the IRS systems because of the manpower that they don't have to have these ticklers set up where AI is going to start generating and shooting out returns or letters to individuals to say whatever that system was set to say. This business has had consecutive losses, and which reduce their tax liability. And when I say tax liability, everybody that works starts with a tax liability. At the end of your tax return, or what I call a roadmap, your liability can be reduced or partially, or it can be reduced to 100%. And that means that if I reduce my tax liability 100%, whatever withholdings or deductions that I took out for my wage job, I could get all that back. So that's what you're looking at. You don't want to have to get into this rut and then start owing the IRS a lot of money because you didn't effectively start your business right, because you didn't take the proper steps to start the business and operate the business, because you didn't have the knowledge of what Tony has taught me, or I am trying to tell you right now. Just be prepared. Be alert. Be aware. Be professional. Operate it in a business-like manner. Do all of those things. And I said, did you? When they asked, one of the factors was, did you change business operations? So if I started off as a tax professional, which I am, and I was just doing individual taxes, and then I saw that didn't. I was generating a loss every year, and then I started. I decided that I wanted to implement a new structure in my business to change the profitability of my business. I think, then that the IRS looks at that as, yeah, she started off with a loss, and she started off 2 years, 3 years with a loss. But in that fourth year, she decided to restructure her business plan, or the plan in which we should have that too. I talked about that in entity structures. The business plan is what I'm going to do each year in my annual meetings, quarterly meetings, or how am I going to structure my business? If it's a loss, how am I going to make more money? What changes am I going to make to make this happen? They want to make sure you do that. And so even with the LLC, that's a requirement that you have meetings of some sort, annual. And now those things were, once if you get in this audit, we put these things together and we present this to the IRS, and they look at it and they say, well, yeah, she was in the business. He was in the business, in pursuit of an activity for profit. So, and have you projected or profited from a business before? I had other businesses. I had a convenience store. It was a small grocery store, and we were in it for a while, and we had losses pretty much every year. But because of the way we structured our business, we haven't had that problem. The business has since closed, but I did run a business that was, although we had losses, it was a for profit. It was for profit. I was in it to make a profit. I hired employees. We paid sales taxes. We paid quarterly employee taxes. So those things told the IRS that surely she's in business for a profit. Nobody's just going to do that if they're trying to reduce liability just to get their refund back. In other words, they're not going to spend money like that to trick somebody or trick the IRS to put this on my return to have a business loss every year so I can get the refund back. Most people are not going to do that. So they look at that. So those are the things you need to consider, even when you get an EIN number, and that's an employer identification number. If you got a job, your employer has that number. But if you're running a business where you're hiring somebody, then that is, you want one of those too. You don't always need an EIN number. You can get an EIN number, but an EIN number is basically if you're having an employee, and you're paying them. So you have to set that up because of the employment taxes. And can you reasonably expect the activity to earn money? So if you're going into a business, do you reasonably think that this business that I'm going in is going to make a profit? It's going to make me eventually leave my wage earning job and run it independently. That would be the objective. That was the objective I had. when I started my business. I looked at it, and every year when I thought about new things, every year I learned something different, and I tried all that, just to make sure. Not even before I knew about the 9 factors or the hobby versus business law or rule. Before I knew all those things, I knew that I wanted to be in a profitable business. Just to say I want to be in business for
Mhm.
profit does not mean that you're in business for profit. So take the information that I'm sharing with you, and even if you have not done it as of yet, do it now. Gather all your documents, put them in one file. Start what I'm telling you now. Think about those things. Think about ways to restructure your business. Think about timing. In these annual meetings that I'm saying you need to have. Keep that in mind when you're gathering your documents. You can have a meeting by yourself if you choose to, um, but as long as you put it in writing and put it in your plan or your business plan, and that way, we can make sure that if this ever happens where the IRS determines if we are a business or a hobby, we can substantiate that information for you. We can substantiate your business. The IRS are making a whole lot of changes. They're doing a whole lot of improvements. That they talked about the hiring and the new budgets and the new things that they're doing, and they got a lot of things coming up. And these things are coming up. Even I going to talk to people about what the IRS call non-filers. That's a podcast for another day. But you got people out there that have businesses and they're not filing their taxes because they don't think they. I don't think they don't think they're not supposed to. I don't think they think that the IRS have record of their information. There's a lot of reasons why these new laws are implemented, going out there now about the Square, uh, Zelle, Cash App, those things, new laws passed. Those entities are required to send you income statements at the end of the year. The IRS have taken the responsibility from you, the taxpayer, to report your income as you make it, and they've put it on the individuals of which your money is funneled through. And so now they're responsible for reporting income to you, to the IRS, and to you. So don't think, and then the people who are not filing taxes, the IRS can go back if you don't file taxes, but they got income reported under a business that you made, then guess what? You're gonna have to pay taxes on that money that you made. If you had a wage job and you did not, and you had this, what a lot of people won't call at first is a side hustle. If you had that and they audit your file, they're gonna take what you already reported and add the money that you're missing. So they put that in what's called a department call on unreported income. So if you unreported your income, didn't report all of your income, that's the numero uno, one way to get audited by the IRS, not reporting income on a 1040 or on your tax return.
That's right.
So that's the reason most people returns get flagged, unreported income.
That's
And
right.
and so yeah, so you just want to make sure, and if you're so far behind, and they can file a return for you. If you feel like you didn't file a return and you didn't know that Cash App sent you a income statement, it's not a W-2, but an income statement is like a W-2. They're going to send you a 1099K. That's just what it's called. And let's say you moved. So you moved from the address that you last filed your taxes. You didn't change your address filings or whatever you did. And so the letter that the IRS sent you, you never got. So years passed, years passed, you never addressed it. The IRS hasn't forgotten about it. So they're going to go back and file this return for you. If God happen, it happens every day at my job. People come in and they got underreporter notices. and the IRS filed a substitute return. That means they took the income statements that was reported by others and they did a tax return for you for free. And guess what? They're not going to do a tax return for free that's going to end up with a zero balance to you.
Right.
It's going to mean you're going to have a balance due. You're going to have it no matter what, or they're not going to even elect to do the return. And with the balance, there comes penalties and interest. So if you got all that stuff going on, then, we just got to be proactive. It's just an awesome thing that Mr. Renfro has this podcast out there, and he takes the time to seek out information for us, to be able to learn things, and so that we can be beneficial to ourselves and to others. And so I think that, these 9 factors and the information that I'm dropping to you, it's key. I know that when I sit here, I give out a lot of information, and I'm trying to keep it in a format for you so you can follow me. I'm trying to make it and put it in layman's terms, or terms of which you can understand. Not that you're a dummy or nothing like that. I'm certainly not saying that. But, if my daughter's a nurse, when she come in here talking to me about NICU and all that stuff, I don't know what she's talking about. She's talking over my head. But so that when I talk to you about the things that I've learned, then I try to make it where you get it.
Right.
And if you don't get it, my name is VANESTER Washington. My number is 409-892-1118. I have staff that works around year round. You just call my office. I will consult with you. I will talk with you, and I will give somebody an opportunity to consult with them one time. I will. But if I find that, because my time is valuable, just like yours. But if I find that you're not trying to take the advice, and then, or I structured you along the way, and then you didn't do what you were supposed to do, and then we get to this point where now the IRS is trying to determine if you out there, you created this business per se, just because you didn't want to take federal withholdings out of your taxes, and you wanted to offset the money you could have potentially owed to the IRS. Guess what? I'm not going to be so willing to assist. Because we talked about this, and we're out there, we're doing it. We can run successful businesses.
Mm-hmm.
We can. We just have to comply with the rules, period. And so when we're reporting all these things, like when we're reporting the business, if you had a farm, it goes on the Schedule F. If you're a sole proprietor, it goes on the Schedule C. If you are a partnership, it goes on a separate return, which is called a 1065. If you are a S corp, it goes on a separate return, which is called 1120. If you are a corporation, it goes on a return, which is a separate thing. Hobbies, when you report it, you report that income as other income on the tax return. Now, all the expenses that you may have incurred to do that hobby that you thought was a business, but because you didn't structure it in the way that you should have, basically the way I'm telling you now, then the IRS going to want all that as income. Let's say you made $30,000. $30,000 worth of self-employment taxes couldn't mean a lot. It could be a lot of money. SE taxes, that's what they call it, self-employment. So you want to make sure that you have all your ducks in a row so that you can do it. You want to get with a preparer or a person to do your taxes that you trust. You don't want to jump from person to person because you and your tax professional may have disagreed or something. Or, as some do, they don't get you the number that you're looking for. You
Mm-hmm.
get what you get. You can't come to my office and I say you get $5, and that doesn't seem normal to you. And then you go to somebody else's office and you get $7,500 and you think that's right. Now, I have this is my thing. I will get you every dollar legally earned or that you legally can get. I'm not going to get you nothing that's illegal. So, but if I went to a person and they told me I was getting a $7 refund and I didn't like it, and then I went to somebody else and they come telling me I'm gonna get $7,500 in a refund, I should have questioned that. I should have said, well, whoa, either she don't know what she's talking about or something else. But we go with it. We go with it till we get caught. And I was sharing with Mr. Renfro before the podcast stated on every 1040, on every 1090, 1065 partnership return, on every 1120 corporate return, at the end of that return, it says that you are attesting to the information that the information on your return was accurately uh, and reported and presented to the preparer by you.
Mm-hmm.
So if you don't look at your stuff, or if your tax preparer don't look at it with you, and then you go with it because it's a good number and it sounds good and you want it, you don't be in trouble.
That's
You
right.
just are. You should not even be filing with people, and I'm not talking about nobody, and I promise you I'm not, um, where they don't give you a copy of your return. Where you meeting them on 1-800-1040 and you never see them. And you never see the tax return that they submitted to the IRS. Only thing you see is a refund in your checking account. You need to care about that more than that. You need to know that something may have been reported on there that was not accurate and you did not present to the preparer. But you don't even know who they are. You just said Jane told you that Sarah in Nutbush was getting people great refunds. So I'm gonna go with her. I don't even care what she looked like. I don't know who she is. I could run up on her in the grocery store and wouldn't know. But now I'm being audited because the business was placed on my return all these years, and the IRS now questioning whether or not it was a hobby or a business. But I went with it because the refund looked good. It looked better than the other person gave me. But the other person probably gave you an accurate refund. And people think if you do a tax return, and if you don't get if I don't get a refund, then
You didn't do the tax
I'm not
return.
getting a refund. No, we did the return. It's so many dynamics that's involved in this. That not just because I do somebody taxes, don't mean that they're going to get a refund. And if you don't get a refund, that don't mean that I don't get paid. I am not a lawyer. I do not work on what they call it commission. If I don't win your case, I don't get no money. That's not what I do. And that's not what tax professionals should do. It should be that whatever service we render, whatever the bottom line is, you were explained the return. You should be explained the return line for line. I may not explain a return line for line for every client every time I do their taxes because I have a lot of returning clients. But if it's a new client, I will explain it to them. I will spend more than 45 minutes in a session with a person to explain what we're doing. And we just got to go with it. It is what it is. And when I say that she was getting a $7 return and she ended up going with somebody that gave her a $7,500 return, that's a fact. That happened. And now it's a situation. And you don't want the IRS to go get you in a place where you can't explain what you presented to them. If it sounds good and it is good to get a refund, I haven't gotten a refund in God knows how long. When my kids were kids, yeah, I got all the EIC refunds and all that stuff. But it is what it is. We just need to be diligent on filing our returns and doing our businesses accurately.
Thank you, Mrs. VANESTER Walker Washington. Very informative, everybody. We have this once a month where Miss Washington comes to us and give us some great advice about how we operate our business, our personal business, and our business. And it's very informative. If you missed some of it, you can go back to us. We have clips on every social media there is. If you're watching us on YouTube, give us a like on the button and join us, subscribe to us. And we'd love to have you. Every month, she's here with us, giving us the best expert of tax income, tax returns, the best. If you ignore it, it's your fault. But please, just get it right. Get it right. It will cost you in the end. Thank you again, Miss VANESTER. VANESTER.
Thank you.
Yes. Thank you, everyone, for watching Knowledge is Power podcast live. We're here every Sunday evening at 7 p.m. with new guests every Sunday evening. Knowledge is Power podcast is here for you, for Southeast Texas and the whole nation. Thank you again, my love.
All right.
Bless. Bye-bye.
God bless you.
Thank you for watching Knowledge is Power Podcast Live. Be sure to like and subscribe to all Knowledge is Power social media pages.